The US government has gone broke, it cannot afford this war, and the people running the country have no idea what they are doing. That is the latest warning from Professor Steve Hanke, one of the most respected applied economists alive, in his latest interview. If you do not know who Hanke is, you need to. He's Professor of Applied Economics at Johns Hopkins University. He served on President Reagan's Council of Economic Advisors. He is the creator of the Hanke Annual Misery Index, which ranks the economic pain of every country on Earth. He is the only person in the world who independently measures Iran's real inflation rate, and his recent article in Fortune magazine, co-authored with former US Comptroller General Dave Walker, went viral after revealing that the US Treasury's own financial statement shows $6 trillion in assets against $136 trillion in liabilities. In this interview, he warns that the inflation genie is not going back in the bottle, that the Iran war will cost far more than $1 trillion, that consumer misery is at a historic low, and that the administration entered this war with zero understanding of the financial consequences. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you are getting value from the videos, hit that subscribe button. It is free, it supports the channel, and you can always change your mind later. Now, here's exactly what he said.
The Treasury did declare insolvency because they produced financial statements, and the former Comptroller of the United States, Dave Walker, and I analyzed those. Or the assets of the U.S. government come in at $6.1 trillion, and the liabilities are $136.2 trillion. By definition, you're insolvent. Things are deteriorating very badly. We've got fiscal folly that's taking place in Washington, D.C., particularly the last three administrations. You got Trump 1, and then you got Biden, and then you've got Trump 2. All three of those administrations have engaged in fiscal folly, running huge deficits, huge increases in government expenditures. And ultimately, those deficits, David, the main point is those are just deferred taxes. Those will be paid by future generations, and they'll either be paid by increasing the taxes paid on April 15th, tax day, or they'll be paid with an inflation tax, one of the two. This is how irresponsible the government is. They're entering a war and they have no idea what the cost is going to be. That's what he's saying. Now, he's talking about the budget cost, the fiscal cost. I suspect that the Harvard study is more broadly gauged, talking about the wider economic consequences of the war and not narrowly focusing only on the budget. If there are broader costs involved, the number is way greater than $1 trillion.
Let me just ask you point blank, can the U.S. afford a prolonged war with Iran?
No. I don't think they should have gone into the war in the first place. Why do you make a decision to do something and you don't know what the benefits are and what the costs are? How about George W. Bush when he went to war in Iraq? Another big disaster. They didn't know what the benefits were. Well, there weren't any benefits. The benefits were negative to start with, and then you pile on trillions of dollars worth of cost on top of that. These things are complete disasters.
So there is Professor Hanke laying out the fiscal reality that nobody in the administration wants to confront. The US government is officially insolvent on its own balance sheet. The budget director testified under oath that he cannot even estimate the cost of the war. Harvard is projecting over $1 trillion, and Hanke says the real number, when you include the broader economic damage, will be far higher than that. The data confirms every piece of this. The national debt has crossed $39 trillion. The Congressional Budget Office projects debt held by the public will hit 120% of GDP by 2030, surpassing post-World War II levels. The defense budget is expanding from $1 trillion to $1.5 trillion. And on top of that, the war in Iran is adding hundreds of billions in unplanned spending, all of it funded by borrowing. On the bond market, the stress is visible. The 10-year Treasury yield just hit 4.4%, the highest since last July. The 30-year is approaching 5%. Treasury auctions have drawn weak demand. $10 trillion in government debt needs to be rolled over in the next 12 months, and the Fed has lost control of the long end of the yield curve. The equity markets are cracking alongside the bond market. The S&P 500 is down 4% on the year. All three major indices have broken below their 200-day moving averages. Moody's Analytics puts the probability of a US recession at nearly 49%. Goldman Sachs has it at 30%. The economy grew at just 0.7% in Q4 2025. February payrolls contracted by 92,000 jobs. And the consumer is already at the breaking point. The University of Michigan Consumer Sentiment Index just hit an all-time historical low, the worst reading in the 70 years they have been running the survey. People are citing high prices as the primary reason for poor personal finances. Now, Hanke explains why inflation is not going back in the bottle, why almost every other analyst is wrong about what is driving it, and why the blockade is making everything worse.
The money supply and changes in the money supply are what eventually, with lags, cause changes in inflation. And for some time, the money supply, broadly measured by M2, has been accelerating, and that's why I said that the Fed was not going to be able to get the inflation genie back in the bottle. And to get it back in the bottle, they'd have to get it back at 2%, which is the Fed's inflation target. If you look at commercial bank credit, got that chart, commercial bank credit, that's growing at about 6.7% year over year right now, which, by the way, that is above Hanke's golden growth rate, a rate consistent with hitting a 2% inflation target. So it's been accelerating for quite a while, commercial bank lending, and that's the big contributor to what's going on. If you looked at bank earnings on Wednesday morning, they were huge. Bank earnings were huge. Those bank earnings contribute to bank capital, and bank capital is what gives banks the leg room, or the headroom, if you will, to make more loans. The Trump administration and the Fed particularly are deregulating and taking off some of the regulations that are imposed on banks. And when they take those off, that frees up reserves. So you've got earnings in banks going up, that increases bank capital, that frees up reserves. And you've got deregulation of banking coming in. The money supply acceleration, M2, will continue, and they will not be able to contain and get the genie back in the bottle. A third of the world's fertilizer comes through the Strait of Hormuz. Well, it hasn't been coming through, and fertilizer prices are through the over 50% increase in those. So farmers aren't buying fertilizer. We're going to have food problems. Food prices will go up. That's another sticker shock. All this is funneling through into affordability, and that will be another factor that I think stupidly Trump's advisors never anticipated. They didn't see the consequences of going to war. The budget director can't even give a cost number for the budget. They didn't see anything coming. They were flying blind. I mean, Trump likes to brag about all these damn airplanes flying over and bombing everything and wiping everything out. Well, he's flying blind when it comes to finance and economics. He doesn't know what he's doing. The Iranians have 180 million barrels of oil that is in transit, that's beyond the Strait of Hormuz, that will be, most of it, 90%, will be supplied to China. And that means that the revenue received by selling at high oil prices at low discounts will continue at least until the end of July. The blockade would have to stay until the end of July to actually start denting the finances of Iran. And if that isn't bad enough, you've got about 80 refineries that have been damaged. A third of them have been damaged, but severely. And it's going to take about 2 years just to repair those facilities. If nothing else happened today, we're going to be 2 years into a repair job.
Is Hanke explaining why the inflation problem is structural, not temporary? The money supply is accelerating. Commercial bank lending is running above his golden growth rate. Bank deregulation and record earnings are freeing up even more lending capacity. And on top of all that, a third of the world's fertilizer supply has been cut off, which means food prices are about to spike on top of energy prices that have already spiked. The consumer data confirms the damage is already here. The University of Michigan Consumer Sentiment Index just hit an all-time low across 70 years of data. 86% of Americans now say gas prices are their top financial concern. Gas has crossed $4.16 nationally. In California, it is approaching $6. In Los Angeles, $7 a gallon. Diesel is forecast by the EIA to peak above $5.80 this month. And now, fertilizer prices are up over 50%, which means the food price shock has not even started yet. On commercial real estate, the extend and pretend that Hanke has been warning about is ending. In January 2026, the CMBS office loan delinquency rate hit 12.34%, the worst ever recorded and worse than the 2008 financial crisis. $930 billion in commercial real estate debt is maturing this year. A 50-story tower in Manhattan defaulted in January. In Denver, office vacancy is above 36%. On private credit, Apollo and Ares have both capped investor withdrawals at 5% after facing redemption requests above 11%. JP Morgan has started pulling credit lines. The private credit market has ballooned to over $3 trillion on opaque balance sheets. And on the war itself, Hanke makes the point that almost nobody is reporting. The blockade is not even hurting Iran yet. They have 180 million barrels of oil already in transit beyond the strait. China is buying 1.8 million barrels a day from them. The blockade would need to stay in place until the end of July before it even starts to dent Iranian revenue. Meanwhile, 80 refineries have been damaged, a third of them severely, and the repair timeline is at least 2 years. In other words, the economic damage to the West is real and immediate. The economic damage to Iran has barely begun, and the administration entered this war without calculating any of it. Here is what Hanke says is coming next.
I think the U.S. continues to deteriorate. It's been deteriorating for some time, and I think it will continue to deteriorate. These two companies, this is hype. It's clearly hype. There's no way their profits are going to increase by as much as implied by those huge increases in stock prices. And the stock price, remember, the stock market's just a present valuing machine. It calculates the present value of free cash flow coming into the company. And there's no way free cash flow is surging by that amount just because of the adoption of AI. Productivity in the United States was 3% per annum in 2024. In 2025, it was 2.1%. Last year, it actually went down. So all of this hype around AI and people adopting it and increasing productivity and so forth, if you aggregate, look at the economy as a whole, it's not comporting with what we're getting out of Silicon Valley hype or what I call Silly Valley hype. No, the government's indifferent because there's one big difference. They can run the printing press and produce money. So technically, it does have the printing press and ultimately could print its way out of a wet paper bag if it had to. And they would continue to pay their obligations, of course, in devalued dollars. That's what would result from the thing. But however, as the Congressional Budget Office, a bipartisan organization, indicates, things are deteriorating very badly. We've got fiscal folly that's taking place in Washington, D.C. We're actually spending a lot more money than we're taxing, creating a deficit that ultimately is going to have to be paid by somebody in the future who isn't even voting on it today. They're not even alive today. So we know that future generations or young people now who are below voting age are going to have to pay for this stuff. And that's fundamentally immoral, by the way.
Immoral because the government entered a war it cannot afford without calculating the cost. Immoral because the budget director testified to Congress that he cannot even estimate what it will cost. Immoral because every dollar of deficit spending is a deferred tax on future generations who are not alive to vote against it. And immoral because the economic consequences, the food price shock, the energy shock, the inflation that will not go back in the bottle, all of it was foreseeable and none of it was foreseen by the people making the decisions. The US government has $6 trillion in assets against $136 trillion in liabilities. Consumer sentiment just hit an all-time 70-year low. Inflation is at 3.3% and accelerating, driven by money supply growth that has been running above the level consistent with 2% inflation. A third of the world's fertilizer supply is cut off. 80 refineries have been damaged, a third severely, with a 2-year repair timeline. And the blockade is not even hurting Iran yet because they have 180 million barrels already in transit. Meanwhile, the S&P 500 is down 4% on the year. Commercial real estate defaults are at all-time highs. Private credit is freezing up. The 30-year Treasury is approaching 5%. Recession odds are approaching a coin flip. And AI productivity, the one thing that was supposed to save the economy, actually went backwards last year. Hanke calls it Silly Valley hype. The question is no longer whether the system is under stress. The question is how long an insolvent government can keep flying blind before the consequences catch up with it. Stay informed, stay prepared, and make sure you are subscribed because we are tracking every development as this unfolds.